Happy Wednesday, everyone. Hope you're well. Welcome to another edition, #AskRobco. Welcome, James, with us this week. Hope you're doing well. Just to tell everyone this week, we're going to do a super fast, punchy edition with headline numbers, intel, and sales transactions. So it's only going to be a 15-minute update today. Loads going on, lots of meetings, lots of inspections, super busy. We'll have an extended version next week. So I want to be really punchy, give you some really good added value, really good content, really good information. So at least you all spent your 15 minutes wisely. Thank you for all returning. I can see all your names there. Hope you're all well. Hope you're all safe. Hope you're all still being positive. So much happening. Markets moving quickly. The news is moving quickly. Unfortunately, COVID is moving quickly. I think there's going to be an update from the Chancellor. There's going to be more incentives for workers, salaries and wages. So we're going to have a really larger update next week. But I want to go straight into the numbers. So first handout, 26 weeks now post-lockdown. These are the numbers we're tracking every week. These are the numbers that is telling you what's happening on the ground, in the market, and what we're sharing with you. Just want you to focus on one line this week. And 14th of September, headline numbers, week 37. And the information we're seeing there, and we discussed it very briefly previously, there was a 2-week slowdown in instructions coming on because of the holiday season. I said I was curious to see if the back end of September, we were going to get the seasonal trend of lots of people coming back from holidays and schools going back, properties coming back on the market. The answer to that question is yes, emphatic yes. 708, it's the second highest number of the entire year. First highest was the week around when the stamp duty holiday was brought in. Loads of properties flooding the market. The agents are inundated, valuations. Huge amount of stock coming on stream. Very positive in that sense. Now, I keep on repeating, keep on saying, the key data to get from that is under offers and sold. And I think we can see the biggest piece of information we're going to see from the data this week is your 213 number, the sold number, the highest weekly amount of sales from the data we're looking at for the entire year 2020, 213, highest sales numbers in 2020 in terms of pure volume. The market is transacting, the market is trading, the market is moving, and this is what you should all be aware of. One, it's very positive, lots of activity, lots of transactions, great for agents, great for conveyancers, great for lenders, great for banks, great for valuers. Caveat, is there sustainability in the market? Question, how long will this go on? Question, is this going to see us through until the end of the stamp duty holiday? Question, and on top of all of that, I'm going to keep highlighting it because it's what we're seeing on the ground, risk, sanction, credit, everyone in those areas on this call, let me tell you now, high numbers are being achieved in these transactions, inflated numbers in the sense of over and above asking price on certain transactions, and a lot of off-market transactions are happening. Not only that, they're getting premiums on those transactions. Red flag risk, red flag sanction, red flag valuation as well, because you can get caught out. Anyone that needs a one-to-one discussion with me on this, please give me a call. I'm trying to get hold of as many of you in risk and sanction and credit as I can to have a discussion. Some of you would have received either a text message, WhatsApp, or an email. To get through the hundreds of you that are registering every week is challenging. Please reach out. We must discuss it further. It's great the transaction happening. It's great that the market is buoyant, especially prime, super prime, where we're seeing really, really good volume. The question is, how are we managing that risk? How are we managing the valuation? How are we managing the sanction? And what are we seeing on the ground with those transactions, especially with the off-market? Very savvy agents out there and we need to understand what that really means. That perfectly sends me on to James. How are you, James? Hope you're well.
Very well, thanks, Rob. I was just going to add from the data there that the sort of somewhat anecdotal evidence from the under offer data that's actually probably 4, 5, maybe up to 6 months in advance of the official land reg data, as those are sort of yet to exchange in sort of 1 to 3 month period, and then a further 3 months lag to land registry. So that really is at the sort of forefront of the data and what's happening live on the ground, as you say.
Yeah, I mean, it's fascinating when you're seeing the volume of work we're seeing, and you're seeing the numbers that we're seeing, and you're seeing the transactions and the story that we're being told, and we're seeing, like James has just said, with the under offers, the asking prices, and the completion stroke exchanges. It's fast moving. You can't be sitting around waiting 3 to 6 months for this to come through to you. You need to understand it now. And I really want to raise it to you as a highlight and a red flag. Please contact me directly. We must have a conversation around this. Anyone that's working credit risk and sanction, especially off market and upper tier super prime, you know, there's a lot going on in that area. And I don't want any of you to get caught out, or your underlying buyers applicants to maybe get caught out, because it's quite easy. So I don't want to be negative around it. I want to be positive that it's happening. At the same time, stress the responsibility for market know-how, specialist experience to understand what those transactions really mean and what's the story behind them, to ensure that we're giving the best advice, best service, best lending, best facilities that we can, understanding the circumstances. So very critical moment in the market with that. And as I said, please reach out, please DM me, please email me. I'm reaching out to as many of you as I can on a one-to-one basis. Obviously, it's going to take me a long time to do that. So please contact me and we can have that discussion. Let's go in straight into transactions, because really there's been so many deals going through, so many headline transactions. James, let's run through a few of those to share with the audience.
Yes, let's try and capture some of the key transactions we've seen in the last week or two. So there's been record-breaking prices achieved in off-market sales across Hampstead and Belsize Park, which we've been directly involved in. There's been transactions at nearly £2,400 a foot in the sort of heart of Hampstead Village, reaching out to the Hampstead Garden suburb. There's been plentiful off-market transactions there, with local agents seeing sort of surging demand. So all very positive in those areas. Across sort of prime London, there's been some big sales in Grosvenor Square the last week or so. Sort of prime first floor flats selling for over £3,500 a square foot, from sort of larger lateral flats going for in the region of £18 million for prime first floor flats, Grosvenor Square. We've had Little Bolton sell 15 million, £3,000 a foot. There's been a Burton Court over in the heart of Chelsea sell, again for nearly £3,500 a square foot. So again, all prime sales. On a larger scale, we've seen in the press in the last week or so that Dolphin Square has been acquired for a price in the region of €800 million. A development from the 1930s over in Victoria, very famous for a lot of its MPs and other inhabitants there. So there is a real flurry of activity in the market, and at this present time, the residential market appears to be performing in a very robust fashion.
Yeah, absolutely. Great data there. I'm out every day seeing properties and seeing transactions, and I cannot highlight how hot, frothy, buoyant the market is. And again, it's tremendously positive. All of the salespeople on the call, all of the relationship managers, all of the people that are doing deals, great news, very positive. all of the risk sanction credit. Just be aware, you've got to understand, we've got so much data flooding through us in certain parts of the home counties, London and the southeast, prime, super prime central London. We've literally got thousands and thousands of transactions, current, historic, through the work that we do. And we really are in pretty unprecedented market conditions in context to where we are in the midst of a pandemic, in a recession, technical recession, and commercially speaking, with the announcement yesterday that we've got 6 months of stay at home, work from home if you can, the message to retail, the message to office, the message to the high street, the message to the restaurant and leisure markets, very damaging, very concerning. This will all have a negative impact over that period on valuation and pricing. And I think we're going to go into a lot more detail in that in next week's show, when we'll spend more time and we'll get more information from the key announcements that came yesterday, coming today, and will come over the next few days. So last comment with you, James, before I wrap up. And as we said, we're only doing a 15-minute catch up, and we're going to go into more detail this next week. Last point from you, and then I'm going to close up with our headline information from today.
Yeah, so when we were speaking to you in mid-August and the market had just quietened a touch on a few of the new instructions and sale volumes and the data we were providing, we were commentating that September, October are going to be really crucial months in the property market, as this is seasonally where there is traditionally an uptick in the market, where sort of children go back to school, people actively in the market, and there's a real surge. And I think the data this week is very strong and highlighting some of the new entrants to the market and the buoyancy that you referred to, Rob.
Yeah, listen, everyone who knows me, I'm in my 27th year in the industry. I've been through 3 or 4 recessions and downturns. And when you have a 6th or 7th sense for the markets, because you've got 100,000 hours of experience and knowledge, expertise and specialisms, and you see what we're seeing on a daily basis, and especially over the last 7 to 14 days with this uptick following the holiday season, there are tendencies and trends and patterns that are very powerful that you need to understand. You need to be aware of. I'm doing everything I can with the platform to share with you live what we're seeing. I do feel that with quite a few of you, a further conversation is going to be required, just because there's too much context and variables around the headline information that's being provided. Just be really clear here. Premiums being paid, top prices being achieved, excellent volume of transaction of sales, exchanging, completing, pretty unprecedented in such conditions and in context of where we are. Question mark, caveat, sustainability. Where does this leave us in 2021? How long does this go on? Are these numbers going to keep on going up? And how do we manage risk and uncertainty with volatility in our lending, decision-making, pricing, and the platforms? And I think that's the key area. For those of you that were with us last week, we spent the whole show specifically on product and pricing. It's so key to managing risk and volatility and managing demand and great volume of transaction at the same time. This week, it's really sales, volumes, data, transactions, and how we're managing that every week because of what we're seeing. So I just want to leave that with you. Very short, very sharp update on the ground this week. We've got loads happening, which is why I'm at home today, in the bedroom working away. So thank you for joining. Thank you for sticking with us for the 15 minutes. The content and the data is really, really important, very high level today. You have to really understand what's going on and be making decisions around that. please reach out, and we'll go into more detail next week. But please understand the importance and the context of the transactions, the premiums, the pricing, the volume. Everything we're seeing at the market is very high level, with pricing, product, and policy and governance and risk. Manage all of that the best you can. We're happy to help you manage that with the intel and the data. And if you need more information, please do reach out to us. And any of the information you're not receiving for whatever reason, contact me and we will get it over to you. So final conclusion, hashtag askrobco. We're on all the platforms, LinkedIn, YouTube, etc., etc., etc. Please follow us there for the data from the intel, the weekly show this week. And if you can't watch it live, you can see it on YouTube. And if you're not getting the link every week, let me know. And the final message today is frothy, hot, residential market, top money being achieved. How are you managing your risk? How are you managing your profile? What are your LTVs and exposure to that? What is your 3-month, 6-month, 12-month, 5-year plan around that? Let's have that as an open discussion. And next week, let's ask the questions around that whole subject and the data and the information we're giving you live. And let's go a bit deeper if we can. So thank you all for joining. Sorry it's so short this week, but the message is clear. The message is loud. And be aware of it. Be safe. Have a great week. Thank you so much, James. And we will see you all again, same time, same place next week. Take care. Stay healthy. Thank you so much.
Thanks all.